Ladies and gentlemen, good day and welcome to Max India Limited Q4 FY2024 earnings conference call. This conference call may contain forward-looking statements about the companies which are based on belief, opinion and expectation of the company as on the date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on a touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Rajit Mehta, MD and CEO of Max India Limited. Thank you, and over to you, sir.
Thank you. Good evening to all of you on behalf of Max India Limited. A hearty welcome to all of you for this Q4 FY24 earnings call. I'm not saying a warm welcome deliberately given the heat wave we are faced with, so a hearty welcome to all of you. For the benefit of some of you who are joining the call for the first time, I have with me my colleague Ajay Agarwal, who is the Deputy CEO and CFO for Antara Senior Living and also spearheads investor relations for the company. Ishan Khanna, who is the CEO for Antara Assisted Care, Sandeep Pathak, who is the CFO for Max India, Ankit Kalra, CFO for Antara Assisted Care Services, and Nishant from our IR team and SGA, our IR advisors. We have already uploaded the results and the investor deck on the exchanges. I hope everybody had an opportunity to go through the same. To start with, it gives me actually great delight to share that we have had a very impactful and interesting year. Significant progress made across all business verticals in FY24, and several growth initiatives are now being planned to accelerate the scale-up in FY25 for new businesses. As you know, 100% inventory sold out in Dehradun. It's now a vibrant and buzzing community with 189 apartments out of 197 handed over for possession. Over 180 residents enjoying the facility in a calm and serene space. Cumulatively, the Dehradun project has collected about 680 crores, which is 7% more than last year. The operations revenue for the Dehradun community increased to 22 crores in FY24, a growth of 32% over last year. And due to robust sales, the community continues to be PBT and cash positive with a cash surplus of 125 crores as of March 24. In Noida Phase 1, all inventories have been sold out since March 23. I'm pleased to inform you our collections are better than planned. We have a 99% collection efficiency, which is a testimony of the quality of customers we have at Noida. We have a cumulative ITD collection of rupees 342 crores, which is 36% growth over last year. Our construction is on track. We already completed block work for all the 3 towers, and the finishing and interiors are underway. And we are confident that we'll complete the construction as planned and shall be ready for delivery as promised. For Phase 2, our approval for sales is still awaited from RERA. We have filed, our application and are waiting to hear from them. On the new communities, our pre-launch activities now are going on for Gurugram community. We have already initiated the work on the RERA approval application, the experiential studio and marketing strategy. This will be North India's first intergenerational project in which we will develop about 0.72 million square feet of senior living with 292 apartments. The project is being developed by Max Estates Gurgaon, and the launch is expected in Q2 FY25. For Bengaluru, we have already closed all terms of definitive agreement and are waiting for financial closure from the bankers. However, in the interest of time, since we don't expect any hurdles to this, we have already started work related to approval activities like submission of development plans with the authorities and initiated work on the experiential studio. This is a 1.08 million square feet development with 544 units, and the project is expected to be launched in Q4 FY25. We are also in advanced stages of discussion for Hyderabad, Chandigarh, other geographies, and as the transaction or deals materialize, we'll be happy to share that with you as well. But we are quite on track to achieve our target of 1.5 million square feet development every year for the next 3 to 4 years. On Antara Assisted Care, it's been a great year. Our overall net revenue increased by 55% to rupees 25.1 crores in FY24, up from 16 crores last year. The care homes net revenue was 5.5 crores in FY24, which grew by 39% compared to last year. Adjusting, of course, for the revenue of inoperative care home, which I discussed last time as well, which we have decided to discontinue because we're now going to operate only full-service care homes. On care at home, that vertical has done very, very well. We achieved the highest ever revenue of rupees 9.3 crores in FY24, which is a growth of 53% over FY23, led by high margin service offering and expansion to new geographies as well. As you know, we've already launched our services in Bengaluru and Chennai. On Medcare, we have now achieved the highest ever net revenue of rupees 7.8 crores in FY24. It's a growth of 1.3x year on year. AGC is a new vertical which only got launched in end of August last year. The revenue scaled up to 1.43 crores in Q4 FY24 from 0.95 crores in Q3 FY24. This is a growth of 53%, and we are already at an ARR of 6 crores within 6 months of launch. On care homes, significant expansion planned for FY25, 600 beds to be operational by FY25 year end. I'm conscious that I had announced that we will do about 360 beds by the end of FY24. There's been a quarter delay. 83 beds in Bangalore, Bannerghatta are coming up and will be up and running by June end. 53 beds in Noida by July or August. So in Q1 FY25, you will find 136 beds, and 98 more in Gurgaon will get added by Q2. So total 225. All these are under fit out. LOIs have been signed, so there's no if and but about these numbers. Already signed the LOI for 85 beds more in Whitefield. The RFPs have gone out now for design and construction. This facility will come up by Q3 FY25. So that makes it about 300 plus 68 beds operational. And at this point of time, we are in active discussions with a few people in Chennai to add about 200 beds by Q4 FY25. So while there's a quarter delay, we are making up by scaling up, this year as well. On care at home, we'll expand our footprint in existing geographies, NCR, Bangalore, and Chennai in FY25, keeping our focus as always on high margin services like critical care, physio, nursing, diagnostics, etc. On AGC, we plan to launch 2 new conditions, respiratory health and diabetes in FY25, and also initiate listing of products in other marketplaces. While they are available today on Amazon, we also want to look at Flipkart and Tata 1mg. And the process has been initiated now to consolidate the back end because we had Medcare and now we have AGC. So the entire back end of products, the warehousing, logistics, supply chain, procurement has been centralized to ensure that we have more operational efficiency and margins, because we do have about 800 SKUs now with 30 SKUs which are private labeled. Now coming to business and financial performance for FY24, there's indeed been a very, very strong endorsement for our brand and offering by customers, employees and partners. If you look at our CSAT scores, across all business verticals, they continue to be healthy. 93% for care homes and care at home, 95% customer satisfaction for Medcare, and 53% NPS score for AGC, which is really a vindication of what the brand stands for and how the customers are perceiving us. If you look at the Dehradun community, our RSAT scores continue to be high at 90%, and 40% of our sales did come to resident referrals. Again, one more evidence for how customers believe in the quality that Antara and Max India produce. It also gives me great pleasure to share with you, Antara Senior Care has been certified by Great Place to Work. We are a very young organization and we are very, happy to receive this, certification. This is an exercise that do over 5,000 companies who apply and only 250 get certified, and then there'll be a ranking which will be done later. So it's a big milestone for us. We are a very early stage organization, so we are very happy that some of the work that we have done to invest in our people, training, culture, have the right set of employees to serve our customers well is now paying rich dividends. Just today, I also heard that AGC is a finalist in the 12th Asia Pacific Eldercare Innovation Award 2024, which are being held in Singapore. That news just came in today, so I thought I must share that with you, as well. We have also signed a MOU with IIT Delhi so that we are able to design and customize our products for seniors, especially mobility aid solutions. We'll be working on that. And we also entered into a collaboration with Dementia India Alliance, which is a NGO working in the space of dementia and mental disorder space. And they are acting as a knowledge partner to offer us both training as well as protocols. They have a tie-up with Nimens on an all-India basis, so we'll get a lot of know-how on memory care from them. If you look at our consolidated performance FY24, As I said, overall performance on financial metrics is better than what we expected. The strong focus now is on growth. I had shared with you last time as well that for a few quarters you will see a dip in the consolidated revenue because as we expand and invest into scale up and we have no inventory to sell on residences, this will happen, but this is a temporary phenomena. As we launch, the residence in the Gurgaon in Q2 or Q1 of FY25, this temporary phenomena will get bridged. Our consolidated EBITDA loss has been contained in line with expectation. It's about a loss of 34 crores versus gain of 12 crores last year. The impact obviously is because of our scale-up and expansion and strategic growth initiatives, the ramp-up in care homes, expansion to new geographies and scale-up of AGZ. That's the impact that you will see. But the losses have been contained through cost optimization and effective treasury management. Our treasury and other monetizable assets stood at a very healthy number of 435 crores as of March 24. So a very strong balance sheet and a consolidated net worth of 492 crores as of March end. Coming now to the quarter update for business on Antara Assisted Care, overall net revenue increased by 94% to rupees 8.6 crores in Q4 24 from 4.5 in Q4 FY23. The care homes net revenue was 1.4 crores in Q4 FY24, which grew by 4% year-on-year. Contribution margin improved to 2% in Q4 FY24 from 0% in Q4 FY23, adjusting obviously for revenue and cost of inoperative care homes. In the Gurgaon care home unit, this is really the unit where we wanted to establish unit economics, isn't clearly established. The margins have moved sharply from -1 in Q2 FY24 to 16% in Q4 FY24. And hopefully, with the ramp-up occupancy of 59% in Q4 FY24, the margin would tend to be higher. We have much higher occupancy in April as well, but those results will declare in the next quarter. On care at home, that vertical has done very, very well. We achieved the highest ever net revenue of rupees 3 crores in Q4 FY24, grew by 97% over Q4 FY23. The overall contribution margin for NCR now is 19% in Q4 FY24, and we have touched about 14,500 lives since inception. On Medcare, as I said earlier, achieved the highest ever net revenue of 2.7 crores in Q4 FY24. It's a growth of 106% year-on-year. The contribution margin at -5% in Q4 FY24, primarily driven by some old inventory that we had to dispose of in this quarter. We have over 800 plus SKUs, which include Antara labeled products for sales and rental. We are gaining great traction on Amazon and offline channel. Our walkers are the 5th best seller on Amazon with 3,000 units sold. On an average, we sell about 20-25 per day. On AGZ, the net revenue scaled up to 1.43 crores in Q4 FY24 from 0.95 in Q3 FY24, a growth of 53% sequentially quarter on quarter. And we have already hit an era of 6 crores within 6 months of launch. 30 plus products have been launched across 3 chronic conditions with good performance in the marketplace on braces and pain relief products. We have more than 26,000 customers in a short period of time. And more importantly, 2,600 repeat customers. This is much more than what we had expected. Some of you who have joined the call for the first time, I just want to reiterate, we are the only organization in India trying to create an integrated care ecosystem for seniors. Our belief is that seniors' needs will change with age and medical condition. And therefore, once they become our customers, we should be able to serve them through many means, through many products and services. And recently, there was a paper released by Bloom Venture, which is a global venture capital firm. And they have also suggested that full stack is the way to go in elder care. That's the statement they have made, which vindicates what our vision is. We are essentially in 3 business verticals. On the asset side, which is independent housing for seniors, which are meant for more healthy seniors who want to stay in a safe and secure community. The services business, which has care homes, memory care homes, and care at home. These are meant for people with more immersive interventions, who have gone through a medical episode, can't be taken care of at home, or memory care meant for seniors with disorders like Alzheimer's, Parkinson's, or dementia. We also have care at home services, which cover critical care, diagnostics, X-ray, etc. And the third is the product business. So assets, services, and products, which is the latest digital platform AGZ. This is a platform meant to address chronic conditions and empower seniors with self-protocols. So while we offer a minimum assistance for them to choose, we're really a products business. That's how the money is made. Currently, we're getting very good traction on this. The seniors can approach us through our physical spaces, through a WhatsApp video call, or call the expert home. And if seniors require products for their convenience, we have an entire range from wheelchairs, commode chairs, power wheelchairs, diapers, walkers, walking sticks, hospital beds, which we provide through this vertical. Our focus is to continuously customize, innovate, so we don't sell vanilla products. We try to look at pain points of seniors and put in something specific which takes care of that pain point. The market size continues to grow. It is still a $10 to $12 billion market, and if you add the AGZ size, where the estimate done by McKinsey with us is about 40,000 crores in addition to this, which is the size in the top 30 cities in Sec A, Sec B category. Recently, you may have seen a study by Colliers where they're saying the demand for senior housing has gone up to 18 to 20 lakh units, which is a very significant increase from what numbers we saw last in 2010. So it's a large growing market with a long-term trend. To summarize, in Antara assisted care, so far we have served about 50,000 patients. On the medical equipment side, about 800 SKUs, including Antara labeled products, some of which are available on Amazon, Flipkart, and 1mg. So hopefully the next 5 to 7 years, our promise of having 8 to 10 communities, 4,000 to 5,000 units of senior living, 1,500 to 2,000 beds of care homes, memory care homes, 50 plus health studios in both physical and online presence. In this north, west, and south cluster, our focus continues to be 4 million customers, Sec A, Sec B, household income 15 lakh and above. So that's the Antara story. As I said, it's been quite an eventful year. Some hits, some misses, as always life is, but we are really focused now on scale up. Thank you very much for patiently listening, and happy to answer any questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. First question is from the line of Chaitanya Shah from Silverline Capital. Please go ahead.
Hi, good afternoon.
Good afternoon.
My question is regarding the Gurgaon care home. Now, in the care home segment, you're planning to add around 500 beds this year. But the Gurgaon care home, which is where, you say the unit economics are established, the occupancies have been stagnant for almost 2 years now. And I was just wondering, at a 58-59% occupancy, first question is, why is it stagnant? And secondly, what gives you the confidence to add another 500 beds when the one care home that you have is still operating at a 59% occupancy?
Yeah. Fair question, Chaitanya. Fair question. So, as I said, the occupancy has gone up in April. I was not at liberty to share that number, but that is about 71% now. So it's now, gone up. But if you look at our economics in terms of contribution margin, what we had said, and the revenue per bed, that has been established. They're doing a lot better on cross-sell. We'd imagine there'll be 10% cross-sell services, but there are 38% cross-sell. So the average realization per bed on per day is ranging between 55 to 63. In fact, it's about 6,000 now, right? It is not our expectation. So in that sense, I would say, while there was a plateauing for some quarters, it's gone up now, and that is giving us the confidence. Secondly, the question of scale up is a fair question. As I said, it's no longer that, we are looking for facilities. The Bannerghatta facility, 83 beds, is going to be, is already open for show around and will be inaugurated in June. The 53 beds in Noida in July and August will go live. The last bit of fit out is happening, on that. On Gurgaon, the LOI has been done on 98 beds. The fit outs are happening, so that will come through. On Whitefield, the LOI is signed, the design is made. The RFP has now gone out for, quotations for construction, and therefore that will come up by Q3 FY25. So those 225 beds are already done. It's just a question of the launch date now. The 212 in Chennai is what we're looking out for, and hopefully since that's a Q4 launch, that also should be done. So that should give you some confidence of how the beds are coming up.
Yeah, so the reason I asked this question primarily was because, I am from Mumbai, and I've spoken to a few doctors who run these unorganized sort of care homes, and not only being full, they have a wait list right now. So I just want to understand, the demand is there and why, it has been stagnant for so long. It was something that I could not really understand.
So I can help you with that. So you'll find in the West, Pune, Mumbai and South, this category is fully established and therefore demand is high, and some people also operate transition care homes. In North, it has taken a while for this category to come up. So if you look at most players, they haven't expanded in the North. They're the only ones who now have 68 plus 98, 168 plus 53, 200 and almost 200 beds by August in North will be the first ones. So South and West have been better markets for this reason you find this. But as I said, in April, the 59 has become 71 now for us.
Okay, Alert, that's good to hear. My second question is on the real estate vertical. Now, the second phase that you're going to launch, I'm assuming that will be at a much higher price than what you launched the first phase at, right, in the Noida community. So just want to understand, are you revising your IRR expectations from the project, and if you are, what is the surplus that we can expect 3-4 years down the line?
So hi, this is Ajay. So yes, you are right. We will be obviously launching at a better price. Just to give you a sense, presently the Noida market for Antara-like standards is selling at approximately 11,500 to 12,000. So it will be up of that. We are not changing our IRR expectation because of reason that once we get the RERA approval, then we have to review the costs and the construction costs, etc. And with the escalation coming in, I want to be in a comfortable zone. But intuitively, I feel that there will be an upside provided we get the RERA as soon as possible. I will not be able to give you the forward-looking numbers from what turnover would be, but definitely it will be better than what we have been able to achieve in phase 1.
Understood. And for the expansion in the care homes, are you going to do any capital raise? Are you looking for any capital raise in the future?
Not as yet. We could be, but not as yet. We are well funded now, but maybe when we see scale up and growth coming through, yeah, we could be. But can't confirm them, as yet.
Okay, that's it from my side. Thank you.
Thank you.
Thank you. Next question is from the line of Kunal Shah from Anova Capital. Please go ahead.
Hello.
Yes, Mr. Shah, please go ahead.
Yeah, can you please share some insights on the revenue growth of care at home segment? What special factors are driving the revenue growth for the segment? Like what projections do we foresee for FY2024?
Hi, this is Ishan here. I think the growth, if I was to talk about what we saw in the last year, was attributed to our penetration in the NCR markets. It was attributed to increase in the higher margin services like critical care, nursing and patient caregiver services, and the fact that we launched the services in Bangalore and Chennai. Our projections for the year are strong, and we feel that we will be able to grow well because Bangalore and Chennai, we've spent 4 and 8 months since launch, and there is a scope for penetrating much deeper there. Delhi NCR itself also, the kind of digital promotions and hospital network expansion that we have seen, we anticipate that penetration will also go further deep, as we saw in the last year as well. So I think we are very well positioned to grow in double digits in the current year as well, because there's a lot of scope in the care at home. But we have to be very careful of the fact that this is a service that has to be built with a lot of operational efficiency in mind, because we feel that we have to make sure the margins are also held. So we focus on high margin services in their promotion.
Okay. And one more question. Can you please share some key metrics for AGC? Contribution margin, ROS, capital employed, or extraction on the e-commerce websites?
Repeat that again, please. Sorry, you missed that.
Just wanted to know some key metrics for AGC, like contribution margin, ROS, capital employed, and extraction on the e-commerce websites.
Yeah. So that, it's too early, basically, but the metrics we're looking at now is revenue, capital, repeat customers, and NPS. right? So if you look at the conditions launched, we have served about 26,000 customers. We look at repeat orders, about 2,600. We look at product market fit, but that determines. We have 12 products rated 4 on Amazon, NPS of 50. So basically, it's about, revenue, product launches, customer serve, repeat customers at this point of time. And of course, ROAS.
Okay. Thank you. That's it from my side.
Thank you. Before we move to the next question, a reminder to the participants, anyone who wishes to ask a question, press star and 1. Next question is from the line of Ashish Raut from GreenEdge. Please proceed.
Hello, good evening.
Good evening.
So I have a couple of questions. The first question is, the employee expenses are on a higher side. Why are corporate overheads at such an elevated level?
Yeah. So I can answer that for you. If you look at, first of all, our HO, services all business lines, and there are sales and marketing, for example, and command center all, part of HO. So we have to look at that, as well. But if you look at what has gone up, and I have the numbers with me, so about 24 crores is the expense on human capital compared to last year. Out of that, 7 is on Tara Senior Living, where it's basically partly ESOPs, partly variable pay, because we did very well, this year. And if you look at Tara Assisted Care, most of the expenses are because of the investment in AGZ and entering Bangalore and Chennai, where we have to invest, in teams. On the corporate side, the 3 crore number that you see, basically it's ESOP, about 2 crores. It's a non-cash item, right? So that's the breakup of the cost. So it's a combination of growth, partly ESOPs, and the team that you need to build, and partly, as I said, in HO, some functions are consolidated with some businesses. So next time, maybe we'll provide a split between what's supposed to be like sales and marketing to be separated out. That we will do. But that's the reason you find the corporate cost to be that.
And I would just like to add also in this, since we are in a growth, trajectory, the team has to be very well curated, very well L&D should be there. So a lot of engagement activities have taken this year, and the company has been completely focused in giving absolutely impeccable training to people and to explain them the culture, etc. And we have really invested in that, and that should get then settled in future years, and it will give that benefit of having a good, strong team for all businesses in place.
Okay. The second question I have is, can you provide the insights in terms of feedback from existing residents on services provided by the company? Also, what positions of customers are repeat customers in terms of cross-sell or upselling services?
Yeah, absolutely. As I said, if you look at our customer satisfaction scores, 93% for care homes and care at home, 95% for Medcare, 53% NPS score for AGZ, and 90% resident satisfaction score in Dehradun. As I said, 40% of our sales came through resident referrals in Dehradun. We have 2,600 repeat customers in AGZ, right? So quite high satisfaction scores.
Okay.
And if you look at cross-sell, in our care home, there's a 38% cross-sell of services.
Okay. Thank you.
Thank you. Next question is from the line of Karan Mehra from Mehta Investments. Please go ahead.
Hello, sir. Thank you for the opportunity. Sir, a couple of questions from my end. So the first one is, what portion of the revenue in percentage are we spending on marketing and branding? And also, have we implemented any performance marketing for physical products in AGZ?
Yes, we have a well-oiled machinery for performance marketing, both for AGZ as well as care home and care at home, the new businesses that's required. So we have that function. In terms of total spend on marketing for brand, it would be around ballpark 7-8%. About 7-8%.
Sorry, sir, I didn't get you.
About 7-8% to build on marketing and brand.
But
Okay.
so I'll like to add in this because one question you asked was that what percentage of sales is the sales and marketing expenses. So since it's a growth business, obviously the sales is, as far as the Antara Assisted Care is concerned, the sale is going to be in a course of time, and for that sale to establish correctly, we need to spend on sales and marketing earlier. So presently the sales and marketing as a percentage to sales will not be a right benchmark to capture. But for a matured business like my real estate residences piece, we are spending not more than 3 to 4% of the total revenue as a sales and marketing, if that answers your question.
Yes. Yes. Thanks for that. And sir, since we are launching the Banerghatta care homes in the next 2 to 3 weeks, do we have a visibility on the number of bookings?
For care home?
Yeah.
Banerghatta care home.
Yes. So while I probably can't give you forward-looking numbers on what the occupancy will look like, what I can tell you is that our GTM or go-to-market plan is very robust. It's a combination of online and offline, which we are going to target to ramp up occupancy. In Bangalore, we've already established a great hospital doctor network, which will fuel movement in. We've already started having show-arounds of the facility, which has started, and we've got very positive traction from people who have visited the facility. Our digital marketing engine and branding locally in Bangalore has also begun. So we are very well prepared for a successful launch of the care home in Bangalore. And in Delhi or NCR, Gurgaon, we already have the network established, so we know there's a lot of demand that we can fulfill. I think it's just deeper penetration on both the online and offline side that is giving us the confidence that our launches, both in Bangalore and the new properties in Gurgaon and Noida, will be very successful.
And just, as information, by the way, the care home in Banerghatta is very close to Fortis, and we already done an Apollo, and we already done a tie with most large hospitals in Bangalore.
Hello.
Yes, do you hear that?
Yeah, I have. So that answers my question, and thank you and all the very best.
Thank you.
Thank you. Next question is from the line of Harsh Kundnani from INS Alpha. Please go ahead.
Yeah, hi, thanks for the opportunity. Couple of questions from my end. Firstly, the approved infusion of 330 odd crores in Antara and the assisted care division. What would be the usage of this amount within these two firms, the Antara and assisted care? And secondly, on AGZ, at what scale do you all think that AGZ becomes contribution positive? And right now, where is most of the what is the reason for most of the cash burn in this particular vertical?
Okay. See, on AGZ, Ishan, go ahead.
So hi, on AGZ, I think even today as we speak at the revenue that Rajit mentioned, we are already contribution one level positive. And obviously as the scale up happens, it's going to become even better. So from a contribution perspective, we are already doing strong. So unit economics are still very fundamentally strong there.
I think if you take an example from the market, I mean, I can only quote from the market, we are not there as yet. If you look at, Mosaic Wellness, for example, or others, at about a 20-25 crore per month run rate, they become EBITDA positive. So, but we already CM1 positive. That's a number I can only give to others. I don't know about us. Let's see as we expand.
Same question was where the cash burn is going. Cash burn is presently going into the expansion phase. So all the team building, all the occupancy loss cap which happens for first 8 quarters, that is going predominantly into that. We are pleased to inform that we have pretty much stitched the team now. All the core team and the incidental teams are already in place, and so it will help us ramp up our occupancies and number of beds in next year. As far as the 330 crores approved budget was concerned, that is predominantly going into care homes and Age Easy. Antara Care at Home is an incidental business which is augmented towards care homes, and so it really doesn't require a special fund for that. But then, predominantly is going for care homes and Age Easy. 330 crores.
Understood. But could you just elaborate a bit on the Age Easy part? Like this seems to be a pretty sizable amount for the Age Easy vertical.
So again, I think one can look at potential analogies in the market and since Rajat mentioned about one organization, I think to build a business such as this, it does require upfront investment in building teams, in building the right technology platforms, in making sure your marketing engines, performance marketing engines are there, because these are costs that come upfront when you're trying to build a digital/phygital business. We're also building physical infrastructure. We're setting up teams that are going to, SBUs that are going to take multiple disease conditions forward. So all of this brings your investment upfront. Hence, at the revenue scale now, the number looks big. But the idea is that as one scales into year 3, year 4, all of this starts making sense because the growth one sees in such businesses is also very high.
Harsh, I'll just correct. I have just cross-checked it. The 330 crores which I'm going to spend, which is approval has been sought, 180 is going into Antara assisted care and all central businesses, and 150 is going invested into residences vertical.
Understood, Ajay. Thanks a lot for this.
Thank you. Participant, to ask a question, you may press star and 1. Next question is from the line of Shreya Rati from SK Securities. Please go ahead.
Hello. Good evening, sir.
Good evening.
I have couple of questions. My first question was, what is the IRR targeted for the upcoming projects in Gurgaon and Bangalore?
Yeah, we target above 20%, so we 22-24% in that range for Gurgaon.
Okay, and for Bangalore?
Similar.
Okay. And my second question was, what are the key drivers that help Medcare achieve revenue growth of 100% plus YOY, and which are the new products that have been launched?
Yeah, basically, as you know, there is no company in India today specializes in products for seniors. We're the only one providing a full suite of products, like, for example, for mobility range, from walkers, walking sticks, wheelchairs, we have everything. So, and we customize some of these for seniors, in terms of what they especially need, whether it's the material or the grip or the safety bed in the wheelchair, etc. So one is we are customizing it and branding it accordingly, and it's a large market. And we also set up an offline channel this year, which contributed, and then we also listed on Amazon, which gave a big flip to this. It's about 1 crore sale already on Amazon. So this was responsible for 100% growth in Medcare.
Okay. Thank you, sir. All the very best.
Thank you. Next question is from the line of Ravi Shah from Opal Securities. Please go ahead.
Hello, am I audible?
Yes, Ravi, please go ahead.
Yeah, hi sir, I have 2 questions, sir. The first question is that you had mentioned that you will be breaking even on care homes and you are currently at 45% occupancy. So what can you expect from revenue? Can you expect at, let's say, 80 or 90, 70% like occupancy levels?
So I think if we touch 70-75% occupancy, you can expect a contribution level margin on up to 23-24%.
Okay, thank you, sir. And sir, one more question. So could you please provide a few highlights on the upcoming intergenerational projects that are planning in Gurgaon?
Sure.
So the intergenerational project is one of its kind which is happening in India. So our group company Max Estates is developing a project 2.1 million square feet of development, in which 1/3 will be senior living. So 2 towers will be senior living and the balance 4 towers would be the regular housing. So it will have its own uniqueness of giving exclusivity to seniors for their own places, but having a common kind of a facility so that they can enjoy the benefits of being in an intergenerational.
Understood, sir. That helps, sir. Thank you, and all the best, sir.
Thank you.
Thank you. Participant, to ask a question, you may press star and 1. Ladies and gentlemen, as there are no further questions from the participant, I would now like to hand the conference over to the management for the closing comments.
Thank you very much. I already summarized this, but I'll repeat it once again because I saw a lot of questions coming on this front. As you know, this year is an expansion year for us. So obviously, growth capital will go into both bed capacity as well as human capital and marketing, all three, depending on which vertical we're talking about. Some of this will get covered up as we launch more communities, but we'll have to, invest the money in scaling up, as we go along. We have served about 50,000 patients. We have very high satisfaction scores across, including in the new vertical of AGZ repeat customers that are now coming in. Our task ahead is to make sure now we meet our commitments and execution in terms of, bed capacity ramp up and occupancy. The Gurgaon care home has firmly established the unit economics for care homes. We just need to make sure that that is now replicated. So hopefully in the next, year you'll find about 600 beds that will come in, and the Gurgaon community and Bangalore, will also get launched, for sale. And let's see how many other agreements we're able to strike for Antara Senior Living. Our vision of creating 4,000 to 5,000 units, 1,500 to 2,000 bed care homes, memory care homes, all that remains intact. And thank you so much for your support and your understanding. Thank you very much.
Thank you. On behalf of Max India Limited, that concludes this conference. Thank you all for joining us, and you may now disconnect your lines.